All right, let's bring in Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Alan, I know you have a trade for us in Tripadvisor, but before we get to that, just want to get your thoughts on the market right now. Consumer discretionary, of course, under pressure today. The market overall is lower, holding on to those losses, but not necessarily adding to them. What do you make of it after last week's gains and now this week's weakness?
Well, we've got a little bit of weakness, but let's remember on Friday, the S&P was within striking distance of the all-time forever highs, and a full V recovery of the S&P targeted 6,300 as far as the upside target of that old drop in August on that old top. So there's still a lot more upside. And we've got earnings season starting very soon, so that could be a fundamental catalyst. But, you don't want to fight this trend. We maybe take a pause, but that's healthy to see this stair-step market. It rises, trades sideways, rises, trades sideways, and I'm not going to fight that trend.
All right, so not fighting the trend, which means that you're still bullish. Do you think earnings season could be, you said a fundamental catalyst, so a fundamental catalyst to the upside?
Yeah, absolutely. Absolutely. Now, it's critical to find the best risk reward, and trading is all about risk reward. Obviously, a lot of stocks have had surges and comebacks, and they're very strong. But I look for opportunities that have better value. And we had talked many months ago about China, and we had recently taken some profits. You've got to learn to take profits when things look good. We taken some profits in Zim, XPEV, Weebio, and then in BK, which is BEKE, took profits in 4 days in those positions when we saw some exponential moves. When China came back, I didn't know what the reasoning was going to be, but they had the best risk reward on the board, and using limited risk options obviously was very fortuitous.
Okay, so took some profits there, and overall, where would you want to put some of that money to work now based on kind of the fundamental picture?
Well, fundamental picture, I love where tech stands right now. I love how Google and NVIDIA are set up to surge, and that should bring the whole index. They make up about 10% of the NDX. So I like where tech is right now. Tech still has a lot more upside. We have not made new relative highs in that sector. And if we do a V recovery targets, about a 20% move to 24,000. So there's a lot of upside there. Now, today's play is not a very sexy tech play. Last week, we did an AI play. That was a little sexier. But today, we're looking at Trip. Just from a risk-reward standpoint, this is a stock that's 50% off its March top, and it tested and rejected that 2020 low, and actually the forever low. So I love the way this chart has set itself up.
Yeah, so you're looking at Tripadvisor down 32% year-to-date as a value play.
Right, and I see my key indicator, which is money flow. So I see leverage long accumulation. So smart money is building positions here down at these lows. Let's remember the low was made only a month ago. And again, that's a forever low in this stock. It's been trading sideways here recently between 13 and 15 for 2 months. A breakout of that range to the upside, that target's 17. And there's a gap up above, number one at 15 and another gap at 20. So oftentimes those gaps get filled. The way I'm looking to play is with a March $12 call below that forever low. That's trading for about 375. The expiration break even on it is about $1 higher. What are we sitting at right now? About 14.70 in the stock. So this option's, $2.70 in the money. So the break even's $1 higher with 6 months of time and those gaps up above. I love this setup from an options perspective.
But what makes you optimistic on this name? Because it's really been under pressure since May, and the consumer has been very strong, very solid, continuing to spend on travel, and Tripadvisor clearly not a beneficiary of that. So if this is a consumer that eventually is going to have to scale back, how does that benefit Tripadvisor?
Well, I trade what I see, and I see that indicator in the fact that money flow. So smarter, larger money than me is positioning in this stock on the upside, looking for an upside breakout. You can look at this also as set up for a squeeze. You can see a sentiment shift psychologically in the fact that we saw some new lows here, and all these built up unrealized profits, these people are going to be looking to cover at some point. Those gaps up above are very, very attractive. A March option has 6 months of time, and it's only $50 more expensive than a January option. So guess what? If the stock stays sideways here for the next 3 months, almost 4 months, this option will lose about 50 cents in value if it's at the same point. So if nothing happens by January, then I can pitch this option out. I gave it a chance. But like I said, if we make a move to that to that 17 and that 20 level. At 20, this option is worth 8, so it's almost doubles in value. And 20, if you look at that gap, is very, very attractive technically.
All right, we'll leave it there. Alan Nuckman, always appreciate your insights. Thanks so much.
Thank you.
All right, that was Alan Nuckman, Chief Market Strategist at bullseyeoption.com. We're going to take a quick break.